Good morning, ladies and gentlemen. It is my pleasure to welcome you to the interim results presentation for EPP for first half of 2021. Good morning, everyone. I'm here with my colleagues and we'll cover the usual topics as in the past presentations. So let me just straight away move to the agenda. We'll discuss today and we'll focus today mostly on operational aspects, and Michał Świerczyński will cover those, and I'm sure you are very keen to listen to the highlights of our couple of months of operations from the last lockdown, and we have some good news to share with you, which Michał will do. And equally so, Jacek Bagiński will cover the financials of EPP. I'm sure most of you have seen our SENS announcement on the results, and also on this end, we have some hopefully very good news to share. And then I will finalize the presentation with just a strategic update at the end of the presentation. And then in the same way as in the past, we'll allow for Q&A at the end of the presentation. So moving on, just in terms of highlights, it is quite clear that we have been hit by two lockdowns at the beginning of the year, January and then half of March and April. So that was no doubt a difficult half year. With a number of our shops, our operations closed from operations. However, Polish economy proves to be very resilient and very quickly rebounding, and I'll share some stats on this end. As I already mentioned, we're very happy with the operations recovery after each of the lockdowns, and we have some hopefully very good stats to share on this end. Our earnings are clearly impacted by the lockdowns, but showing good signs of really recovering. And again, we have some better numbers for this half of the year than for the same period in 2020. And finally, we'll also share with you the work in progress on EPP's strategic objectives that we have been telling you about in the past. We're working very hard on those. And again, I would like to share some of that with you during this presentation. In terms of a very quick market update, let me start with clearly what bothers us most, i.e. COVID-19 and its impact in Poland. What you can see on the slide is the percentage of population that is vaccinated. Poland currently is 51% vaccinated in terms of double doses, and 52% of people that wait for the second dose. This lags behind some of the European countries, and we have selected some for comparison, but it also is materially better than some other countries. So it's more or less in the middle of European Union. I will say it's disappointing that the pace of vaccinations slowed down in recent weeks, and you can see this in the slide. However, importantly, from our operations, the regions where we have our shopping centers are vaccinated better than average. Cities are vaccinated much better than average. So a big chunk of this number is in the countryside. Poland has much bigger farming countryside population in comparison, especially to Western Europe. So partially this is why this stat is lagging behind. There's one other important reason as well. When you compare it to France, as an example, France has 10% of people that have taken the first dose, and this data is from 12 September, so just a few days ago. The vaccinations in France have heavily accelerated after imposing the restrictions of using restaurants and certain public services if you are not vaccinated. And this prompted a lot of people to sign up for vaccinations. Polish government is working on similar plan. It's in the making. We don't know the detail of it yet, but the government officials say that they are determined as well to create mechanics to incentivize more people to get vaccinated. However, the fact is that 52% is already giving certain comfort in terms of significant part of the population being vaccinated. Some other stats that I want to share with you. What you see on the slide now is a 7-day rolling average of new COVID cases. And Poland, as per beginning of this week, had 12 cases per million people within a 7-day rolling period, which has been 3 days ago the lowest infection rate in the entire European Union. And that's a very important stat, and that's why we have some very good public movements and visiting data and stats in our shopping centers. The European Union average is 114. So let's say on average 10 times higher. And just so as you can put it in the perspective, the number of 7-day rolling cases per million people in April, beginning of April, when it was the peak, and you can see the peak on the slide, was 764 cases. Today we have 12 cases per million people in a 7-day average. To put it in another perspective, we believe the likelihood of new lockdowns in Poland is very low. I cannot say it's zero, but it's very low, and the government officials tell publicly that they are very determined to avoid further lockdowns. The stat that is critical there is the number of patients in the hospital. You can see this data in the orange color on the slide currently on the screen. So currently, as per, again, September the 12th, Poland had 666 patients in the hospitals. And 430 that you see is the same 7-day rolling average of new cases, but per the entire country, not per 1 million people. The point that I would like to make here is that, again, this stat is very, very low. When I compare it to the peak of April, beginning of April, there were almost 35,000 people in Polish hospitals. 35,000. Currently, we have less than 1,000. This number is moderately growing, but on a very, very small case. On this basis, we are cautiously optimistic that we shouldn't be having any further lockdowns because, the rise in infection rates as the autumn is coming, everyone expects it, but with significant part of the population vaccinated and with very low cases of patients in hospitals, we're remaining optimistic that Poland should avoid further lockdowns, and therefore EPP shopping centers should continue performing and operating in the future. Quickly, two additional comments related to COVID. We have decided to open vaccination points in a number of our shopping centers. Currently, in 6 of our shopping centers, we have actively operating vaccination points. It's actually available that if you just pass by, you haven't been vaccinated, you can come, register, in a couple of minutes, be vaccinated. There's a surplus of vaccinations. Anyone willing can come and easily do that. We're also promoting vaccinations in our shopping centers, so we're using this to incentivize people not only to visit our shopping centers, but also to vaccinate. One other action, this is now countrywide picked up by Polish Council of Shopping Centers. EPP has started the campaign of promoting wearing masks in public spaces. What you can see on the photo is the mannequins in one of our shopping centers, and that's part of the initiative to promote wearing masks. This has been taken under the patronage of the Minister of Health, and as I already mentioned, the number of other shopping centers via the support of Polish Council of Shopping Centers have also picked up on this initiative. So again, we're very happy EPP was the leading force to start this, and we're very happy with Minister of Health noticing this and supporting it. Very briefly on the COVID-19 legislation update, we have published the SENS update on this 3 days ago, actually on Friday afternoon. Just briefly, this new law has come into force in July. It has two important aspects. One is that it has allowed tenants to cancel some of the extensions that they could make under the previously obligatory COVID legislation. And the second thing is that for the future possible lockdowns, which hopefully will not be implemented, there's a change of the tenant release system, tenant rent release system. The new legislation changes it to 20% of rents during lockdowns and 50% of rents for 3 consecutive months after the lockdown. But again, this is applicable only to future potential lockdowns if they are implemented. In terms of the possibility of tenants to withdraw from the leases, we published the stat on this. Our WALT calculated, so weighted average lease term, calculated now in September, has reduced by less than 4 months. On average, this is because 21% of total EPP tenants base on average through 3 lockdowns that tenants could elect to withdraw from extensions were entitled to withdraw, and that's why this impact is not that significant. Less than 4 months impact on our average total WALT. Finally, on the macro stats, I don't want to spend too much time on that. I think today it's really about briefing you on our operations and financials, and I have been talking about this in the past. We continue with very low unemployment rate. In Poland, it's less than 4%. Why it is important? It is important because it pushes the wages on a high pace. From our particular perspective, this is great because spending power is under pressure to grow, and we have generally more money in the society to spend to grow retail spending. Similarly, the government debt in Poland continues to be comparatively low within the European countries, and again, this has a direct correlation to GDP growth potential for Poland. And on this matter, sorry, I was pushing the wrong button. You clearly can see the Polish GDP growth continuing to outpace the European Union. 2020, the contraction of GDP was much smaller than European Union on average. 2021 already, and please note, it starts from a much lower base. The growth is marginally higher than European Union on average, and it continues 2022, 2023. So Poland will continue to enjoy growth higher than the entire European Union on average. This data here is taken from Oxford Economics, so it's as objective as it could be. The same applies to retail sales growth. Again, we're using Oxford Economics. The data is from mid-2021, so fresh. Clearly, you can see on the slide that the dynamics of a growth is forecast to decrease, but again, Poland is forecast to materially overcome the average European Union numbers. So before I head over to my colleague Michał to brief you on what has been happening in our operations, let me just summarize the key points here. COVID-19 continues. Unfortunately, we're not having any expectation that it will be disappearing anytime soon, but with the vaccination growing, and we also with our hopes that Polish government will incentivize the balancing part of the population to vaccinate sometime soon, we believe Polish economy has very, very strong fundamentals to continue to grow and therefore support retail spending in our centers and in general economy. And Michał, I think it's a good time for you to brief about footfall, tenant turnover, and the general operational rebound.
Thank you, Tomek. Good morning, ladies and gentlemen. On the portfolio side, we have increased the number of our assets by recent purchase of 4 retail parks, which is part of our last tranche of the Metro transactions. Through this transaction as well, we have increased the GLA now close to 1 million square meters. The first half of 2021 was a very challenging, but looking at the recent month, also a very promising period in both in the industry and both for the tenants and the landlords. As you know, we have went through 2 quite long lockdowns. The first one lasting the entire January, and right after this, after a short period of quite also interesting recovery in February, went under second lockdown, which lasted from mid-March till almost beginning of May. During that period, from the beginning of year until May, the entire F&B and entertainment industry was under full lockdown, and then of course operating right after with quite heavy sanitary restriction. Despite all that, if you see on the graph and on the chart, May, June and July look very promising in terms of rebounding, regaining whatever was lost. We see that the footfall is growing every month closer to the pre-COVID levels. It's still not there, yet then we have also been observing a quite high conversion rate. And if you look at the turnovers, we are actually higher than where we were in 2019. And 2019 already was a very good year for the retail industry, exceeding the 2018 results. That clearly shows that there is a still big demand within the customers to go and shop, to entertain themselves and to spend time in shopping center. We also put on this graph the share of online purchase, which you can clearly see that together with the opening of the shopping centers, the share of online purchases has been declining. This definitely proves that the brick and mortars is still and will be, at least for the next decade or so, the main source of the retailtainment. So the place where you buy, the place where you spend time, whereas online will be definitely playing a very important supportive role within the omni-channel area. We have presented another slide for you just to show you that the turnover growth was not only generated by one particular category, but moreover, it was spread over majority of the categories constituting all of our GLA. The only category that of course was not performing as we would wish is the F&B sector, together with the entertainment, with fitness, with bowling alleys. And the reason for this is that during May, all of those sectors, starting from November last year, were under full lockdown, and also during June month, operating under strict restrictions. So looking at July and August, those branches are recovering. We see positive signs, especially in the food court sector, small restaurants, regaining the lost ground and seeing a lot of customers dining and spending time and spending money in restaurants. We also see that cinemas are also moving that direction. This branch will require some time until the habits return, until people return and start spending time in shopping center like they've been before. My estimation is that by the end of the year, this branch should be on a very safe and healthy level and start building and gaining ground back again. We've been also seeing some of the F&B sector looking for leasing new spaces and expanding, so we're happy to see the movement, the energy, especially in that sector. On the leasing side, this also was a quite interesting and optimistic period for us. We've been actually quite busy to serve the demand of the tenants seeking quality retail space. We've been signing leases across all the categories. We've been also prolonging the leases. So that's also very positive sign for us to maintain and going together with our on track with our plan of leasing the vacant units. As key takeaways, I would like to highlight 4 important elements. We've been very busy and there is a lot of movement and tenants are willing to sign new leases in our portfolio. Just in H1, despite that we've been under almost 2.5 months lockdown, we've signed 200 leases, both new and prolongations, totaling roughly 70,000 square meters. The tenant performance in July was, I would say, outstanding, given the fact where we were and what kind of turmoil COVID has generated. So exceeding the 2019 turnovers. Our retail occupancy is at 96%, and we are on track of our plan of leasing the vacant units. And our debt collecting ratio is at 93%, and that's mainly due to the very complex legal situation with prolonging the leases, withdrawing the prolongation notices, and we need some time until we sort this out in our bookkeeping department. But we believe that by the end of the year, we should land like back in 2020, close to 100%. Now, we've presented you a lot of stats, a lot of positive numbers, but we also thought it would be a great idea to give you a little bit of a feeling and a snapshot of how all that numbers relate to reality. And we have prepared for you a short movie showing you how people actually interact in shopping centers, how they spend time. So happy to answer some of the questions. And if you can bear with us for a minute with this following movie. Thank you.
Good morning, ladies and gentlemen. Let me start the financial section from the summary of our earnings for the first half of 2021. As you can see on the bottom of this slide, the distributable earnings and distributable earnings per share increased from 2.38 to 3.66 euro cents per share. That is by 54% comparing to the first half of 2020. There are a couple of drivers of that growth. The main driver, as you can see on the net operating income and EBITDA line, is the significant improvement of the operating results. The main reason for it was obviously the lower negative impact of the lockdowns and the rental concessions granted in 2021 comparing to those granted in 2020. So to give you some more numbers, the COVID impact that we recorded in the first half of 2020 was estimated at the level of 20 million euros. And this was for the first half of 2020. And in the same period, the negative impact of the COVID on our numbers in the first half of 2021 decreased to 10 million, from 20 to 10 million. Therefore, we have an increase of 10 million euros on net operating income and EBITDA level. So this is the main driver of the increase of the earnings. The other driver is the current taxation line. As you can see, we recorded a positive variance of 3.2 million euros on the tax line. And that is driven by the fact that following the pandemic, the government decided to suspend the application of the so-called the tax imposed on gross asset value, which we paid historically. So as you can see, that tax on the application resulted in this positive variance. On the top of that, we were able to recover
sum of tax paid in 2019. So there is actually income of the in the tax line that you can see comparing to the costs recorded in the 2020. If we can. On the summary of our balance sheet position, what is well to mention first of all is that our NAV per share increased from 1.08 to 1.12, and that increase is driven by two factors. First, the improvement of NAV, and that actually results from the operating earnings, and more importantly, also the slight still but positive revaluation of our assets. So if you can look at the top of the page, you see that there is increase of the value of our properties by 125 million. And that actually consists of two reasons. First, obviously, we consolidated 4 assets that we purchased early this year. But as I said, more importantly, we recorded 9 million of positive revaluation of our assets comparing to the end of 2020. So that is actually a very positive, I think, information for all of us, that valuators decided to maintain the values of the assets, actually increase them a little bit from the end of 2020, assuming that the COVID was, or the impact of the COVID was already recognized in the books of the company as of end of 2020. Cash balance obviously decreased, but this is due to the fact that we financed the acquisition of the power parks, these 4 assets called power parks, from own cash, and the debt, which increased also by 26 million euros. In regard to liquidity position, as you can see on the graph on the right side, the company will face a significant refinancing event or events in course of 2022. You'll see in the first half of 2022, there is 120 million euros loans expiring. And in the second half of 2022, there is almost 780 million euros loans expiring. So what we see on the financial market is that the sentiment to finance retail assets gradually improves. We see landlords advancing with the talks on refinancing with international banks. We are obviously one of them. We started talking to the landlords already at the beginning of May, immediately after the second lockdown was finished. We had very constructive discussions. The banks told us at that time, early May, that they would like to see, before they commit to the refinancing and advance with the discussions, they wanted to see a performance of our shopping centers expressed in footfall, turnover, and rent collection for a couple of months, to see if there is a recovery in our shopping centers after the lockdown. And obviously, as Michał was presenting to you, and we are presenting this data also to the bankers, we have already 3 months of a solid track record of performance of our shopping centers. We see strong recovery of turnovers, footfall, and the rent collection is on a very decent level as well. So we will presenting this data to the bankers as we speak. Obviously, we hope we will continue with refinancing towards the end of this year, and obviously we will be advising you gradually on the progress in the refinancing. And the last element that I want to raise, and Tomek will follow on it, obviously we are in the process of disposing of certain assets, and surely some of the proceeds that will generate from disposal of these assets will help us to refinance the loans expiring in 2022. Thank you very much.
Thank you, Jacek. Let me then carry on to just strategic update and final closing remarks. Jacek has mentioned that we're well advanced with the disposal program, and I can confirm that to you. We don't yet have any detail to be announcing in terms of signed binding agreements, but we are well advanced with a number of discussions. So as previously communicated to you at the beginning of the year, and then re-stressed again at the pre-close presentation, we're realizing our strategy as presented to you. We're focusing on two key corridors, so to say. One is we're in the market talking to a number of parties, trying to identify a strategic JV partner for a selected number of assets, where the intention is for EPP to stay involved and managing the assets, probably on a 50-50 basis with an incoming investor who can take benefit of size and quality and know-how of EPP management platform. And maybe one comment I can share on that end is that when we were highlighting our strategy at the beginning of the year, we were quite clear that we need to be a bit patient here, because the markets will need to see some stability in the shopping centers. We have facilitated this process. Don't want to wait too long. We are hoping there will not be lockdowns in January or March and April, but that's outside of our control. But the good news is that even though the undisturbed operations are only happening from May, so a few months, we have a handful of investors that we talk to. Okay, this is a journey, this is a process, but you know, the worry that I'm sure some of you had a year ago was that maybe there's no one really to talk to. There's investors that see the value, see the benefit of well-managed, well-located shopping centers, which are the EPP shopping centers, of course, a few others as well. So there's the feedback I want to share with you is that we're actively engaged in discussions, and we hope to be able to deliver some good news to you within the next couple of months. The same is the case on a smaller number of assets that we selected for full disposal. We're also actively pursuing those. Again, we haven't signed anything binding yet, but we have some active discussions in this field as well. So I'm as confident as I can be speaking to you today that we're on a good track to deliver our strategic goals in this specific area. And as you could see on the slide, our time frame now to sign binding agreements is within the next couple of months. So the slide says 6 to 12 months, but we're really working with a big effort to be rather able to deliver this within the next 6 months than 12 months. We keep it for a bit of cushion. We don't want to over push it. We also want to maximize the transactional terms and get as good as possible terms from the market. That's why we want to be a bit careful there. But we're very busy now on this end. One other area that I would like just to share with you briefly is ESG. And at the end of the year, we have decided to very heavily engage in ESG. We have been doing a lot of things before, but now we have made certain strategic decisions and certain strategic movements. Rafał Kwiatkowski, COO of EPP, has been kind enough to take on the role of leading the ESG report. You can see on the slide the work we have done so far from April to September. This was a lot of work of a wider EPP group involving a lot of people from all the departments. So it's a total complex strategy for the entire company. Based on that, we have fully finalized our strategy for EPP. We have presented it to the board. We have finally made some changes and amendments based on the feedback from the board. And I'm pleased to confirm that at the beginning of September, our proposed ESG strategy has been approved by EPP NV board. What's next for us is that we're now working on implementation of certain steps, and we're working clearly on the first full ESG report. It will be part of EPP's annual report, and we intend to publish it at the end of first quarter 2022. Just maybe that I don't leave you with only this general information. What you can see on this slide is the 4 strategic pillars that we have decided to focus around. This is specific EPP vocabulary and pillars. We have created those in all company workshops. And the 4 pillars are, as you can see, trust through transparency, which is really about communication, mindful management, which is about forward thinking and resilient organization that we want to create. So anything we do today, we would like to put it in the context, in the perspective of where we want EPP to be in the future. Space for everyone, inclusiveness, diversity, and last but not least, Earth Citizen, which clearly is about our environmental impact. And on this slide, and final slide on ESG in today's presentation, just to show you that there's a lot of detail that has been worked out behind these strategic pillars. So trust through transparency, we have 3 strategic areas, which is compliance with laws and regulations, business ethics, market presence, and then you see a number of operational aspects that we will have, and we are building certain goals and action plans. What I would like also to clearly mention is that EPP has been well advanced with a lot of that without publishing an ESG report in the past. So we have few areas where we have to do more work, but in most of them, we are actually very well advanced. One specific area in operational aspects that you can see in trust through transparency, suppliers code of conduct. That's something we haven't been doing, and that's something we'll do from the beginning of next year. On the other points, we have been doing a lot already. Similarly, in mindful management, again, we're doing a lot of things. One specific thing that we'll do from the scratch is suppliers ESG assessment. That's something that will become part of the action plan for 2022. Space for everyone, again, similar comment. I'm especially happy with various volunteering and community involvement programs that our shopping centers are doing. In 2021, we're celebrating 5 years anniversary of EPP. We have tasked each of our shopping center management teams with creating 5 low-cost volunteering actions, and the response from the teams has been just fantastic. There's great actions. We'll be sharing detail of those in our ESG reports. But I'm really happy with seeing the level of energy and fantastic ideas that have been proposed by our people in the shopping centers. Last but not least, clearly very, very important topic is the environmental aspects. And again, we're already doing a lot. Clearly, our strategic aspects there will be the GHG emissions, so carbon footprint, but also energy management. We're already, with our technical team, doing a lot of work there, and we'll be presenting a lot of subsequent detail on how we see EPP moving forward with improvements in this area. So just to finalize, let me just repeat our key strategic focus areas as of now. As Michał was explaining, I really see our top focus area now being our operations, so our asset management, property management plans. Clearly, the pandemic has an impact, and we have a lot of work. Our ambition is to come out from COVID stronger and better. We are building certain plans. Michał, Wojciech, and the teams are doing a lot of work, and they will be very busy in the months to come. Jacek was talking about the debt refinancing. I briefed you about the asset disposal program. Clearly, especially September, October, November, these are the critical months for us to make a lot of progress in this area. So again, we're expecting us to be very, very busy there. Implementation of ESG strategy under the guidance of Rafał, but involving 30 different senior people across the EPP organization is one other very, very significant strategic pillar of activity for us. A lot is going to happen in this field for us in the next months. And maybe last final comment here is about the dividends. I know this is a hot topic. Our intention is to revert back to paying dividends as soon as possible. But as communicated previously, we want to make progress in the asset disposals, in the debt refinancing, and therefore, as communicated in the SENS announcement earlier today and on Friday, as of today, we're not making a decision on the dividends for the first half of the year. We defer this decision. We'll make this decision when the full year results are known, and also when we believe we have made good progress in both asset disposal and debt refinancing programs. So that leads me to our last slide, which is the DEPS guidance. And I'm pleased to repeat before we move to Q&A that we're confident to confirm that our previously reported guidance that we have provided to the market of 7 to 7.25 euro cents per share, we are confident that we can deliver on this guidance. Again, there's assumptions. We clearly need to caveat it that this is assuming no further lockdowns later this year and no significant tenant failures. One is really heavily connected with the other. Tenants are performing well. Michał briefed you with the tenant turnovers, so we don't see the tenant failure risk as material. And we truly hope the risk of future lockdowns in Poland, with the good stats on the low infection rates and very low hospitalization rates, remains minimal. Thank you very much, and that is it from us now. That leads us to Q&A session. Let me just pick up the and let's move on. So we have few questions. So Michał, let's start from you. The question comes on rental escalation rate for new leases and on renewals, given that approximately 20% of the leases are expiring this year. So rental escalation rates, and what are the rents on renewals in comparison to current market?
In general, we are signing all the new leases based on the, let's say, the pre-COVID levels, the pre-COVID ERVs. And that's mainly either at the ERVs that was set before or even at the higher level. On the renewals, we are also seeking to improve the rental incomes, of course, based on the tenant performance. In cases where we are not able to agree with the tenants, the desired rental levels, we are signing short-term leases. So overall this year, we haven't yet calculated for the entire year, but we can give later the detailed number, what is the actual reversion rate.
Thank you. There was also a similar question from Pranita. What was the reversion rate on the new and renewed leases? But I guess that's already covered.
That would be 0+, given the current market.
So Michał, let's stick to you. I'm just looking at various questions. What is your view on cinemas going forward?
Cinemas was going for a very difficult time, not only because they were not able to operate, but when the time came that they could operate, and we had that situation in February this year, they simply had no movies to display. So they are working with a little bit different momentum. All the blockbusters need to first be shown in the US market, in the UK market, and then it could be shown in European, especially in the Polish market. Then once they could be able to open, they could not sell food and beverage, people have to wear masks. So all those elements that were rather scaring people away from something what we call leisure and enjoyment and spending good time. What we're seeing right now is that with the new movies, with the restriction easing up, people are slowly going back to the habit of going out to the movies. During the lockdowns, we've been all kind of locked in our houses in front of Netflix and other pay TV platforms. So I think when I'm speaking with the cinema operators, the time will come. There's a different experience in watching movies in a cinema and watching them at home. And there's a lot of people who enjoy it. Cinemas are also reaching out to clients with different services. In Łódź, for example, every chair is a recliner chair. So that industry is still developing. And like I said, they will require a little bit more time than the fashion industry, health and beauty industry, and all those categories that have picked up quite quickly right after the lockdown. So we're looking optimistic. We see, like I said, positive sign. We see the numbers picking up. We believe that if there be no further lockdowns, people will get used to the fact that there are cinemas, that they will be spending time in cinemas on Saturdays, Sundays, or other weekdays, evenings. And this is not definitely a time where we can call that this is the end of the cinema movie. I think it's a short break, and they'll be back on a good pace.
Thank you, Michał. And there's a second part of this question which you have answered, whether we anticipate downscaling this space at all. So I think I agree with Michał. I believe this space will be required as part of the shopping centers and people will be coming back. And I can tell you, I was watching last night this volleyball championship in Poland. Poland was playing Russia last night. 20,000 people in the sports hall, arm to arm. And I guess they were checking the vaccinations, but people really want to be out in social places big time. And that's definitely true for the cinemas as well. Jacek, there's a number of questions in your field. Let me start from the first one. Are you likely to negotiate a better rate on refinancing?
No, I don't think this is likely. I think we will be successful if with current LTV we'll be able to maintain the rates as they are. One thing maybe I would like to add, and obviously, as Tomek was talking about, we will be progressing with the asset disposal. So what will happen is that in some cases, we may be required to decrease the LTV on the individual loans, which is actually in line with our strategy in order to refinance. In that case, if we are able to decrease LTV on certain assets, those loans can be renegotiated, and there are some chances that we can get a better rates comparing to what we pay right now.
Thank you, Jacek. Another question on the refinancing. Do you expect the banks to require a greater proportion of loans to be amortized?
No, I don't think so. I think, as I said, some of the banks would require some, let's say, prepayment, or may require some prepayment at the time when the refinancing takes place. On the other hand, obviously, this will be to the advantage of the company in that sense that the cost of that loan should drop. We currently pay the amortization at the level of 1 to 2%, depending on the loan. It's a pretty standard amortization, so I do not expect to see the increased amortization in general.
Thank you, Jacek. There's a general question in terms of the disposal program. Where do we expect the LTV to reduce to post-conclusion? And also how pricing compares to book value? And short answers. The general LTV, I can only repeat what we have stated previously, doesn't change. We'd like it to be materially below 50%, ideally close to 40%, and that remains our target. Nothing has changed in that field. And in terms of the book values, we're targeting book values or higher. We have one or two discussions above book values, and we're happy with them. This continues to be our target. At the end of the day, we expect to be in this territory or better, and that's our target, and that's what we are focused on to be able to deliver. Clearly, it depends at the end of the day with the response from the market, but our goals remains to be structured around the book values. And Jacek, maybe you can try and tackle this question. Do you intend to access the bond market?
Yes, we intend to do so. I think what the plan would be that the plan A would be to refinance the existing loans with the current lenders as they actually finance these assets for the last 4 to 5 years and are pretty happy with the performance, historical performance, but also current performance after the last lockdown. But we also are in discussions with a number of bankers who are advising us on the potential issue of the bonds. But I think in order to really seriously think about the issue of the bonds, we need to first complete or advance with our disposal program in order to evidence that we can decrease LTV below 50% and in consequence try to achieve investment grade rating, which would make the launch of the bond much easier and cheaper.
Thank you, Jacek. There's one other question that I'd like you to answer. 2 people on GAF tax exemption, if we know how long it can be in force.
Actually, the exemption is directly related with state of so-called pandemic. So as long as the government does not withdraw the state of pandemic in Poland, that exemption suspension will continue. We think that that state of pandemic announced in the second half of 2020 will continue, I think, at least until the end of this year.
Thank you. There's one other question which I can tackle quickly. Does the 2021 guidance assume decline of NOI due to asset disposals? The answer is no, because we do intend to conclude binding agreements, but then in the Polish market, most cases, the purchaser would require a tax ruling. In some cases, there might be a need for anti-monopoly. This takes 2 to 3 months. So this takes us to beginning of 2021. So the intention for the rest of this year is to sign binding preliminary contracts, but the actual closing that might result in the lowering of the NOI will hopefully be happening only at the beginning of 2022. Let me just look through these questions. I think we have answered all of the questions that have been asked. Maybe Jacek, there's one final that I don't think we tackled, or indirectly we did. At what LTV level will you be comfortable resuming dividends? And I think I gave you a hint on that, but if you want to add to that, Jacek, you're welcome.
I think that as we spoke already, I wouldn't like to put the number of LTV, which would be able to start paying dividend. What is, I think, crucial from our perspective is to advance with the disposal program and with the refinancing. So looking at the calendar and what Tomek and I said, we should be well advanced with disposals and refinancing at the beginning of next year. And then at that time, we will take a decision if the company is able to start paying the dividend or not.
Thank you, Jacek. So just to re-stress, we're really motivated to have done enough of a progress. So as when we close the books for the entire 2021, we have a solid base to really be having a good discussion and good considerations on this topic. I think we're coming to an end. There's just one final question that I'd like to still cover, so as Michał can be the final one to comment. Michał, what are our expectations regarding rental discounts for the second half of the year?
Looking at the performance of the tenants, we actually have not been giving any rental discounts right after the second lockdown. We have only applied some help to only the local tenants. But looking at the development, and like I said, provided there'll be no further lockdowns, we do not expect to give any further rental discounts.
Thank you, Michał. And please take into consideration that this new law and the previous COVID law has been taking a lot of money from the landlord. So partially this decision that we have made is driven by that. We're forced to do unilateral help, regardless whether tenants really need it or they are in good financial situation, and this really limited our possibilities. So our stance since then is that we're helping, but only those in real need, which, as Michał said, it's small local tenants, between F&B and leisure. Thank you very much. That's it. Jacek, Michał, thank you very much for your time this morning. And I hope you found this presentation informative and interesting. We look forward to continue engaging with you. And as highlighted, we have some key strategic areas of focus for the rest of the year. Thank you very much.